4 signs to know when a trend is over in the crypto market. So if you are new to this channel, this is Remit Trade Academy. My name is Paradise. You will know when a trend is getting to an end so that you can take advantage of the new trend in the market. So definitely watch this video to the very end. If you are new to this channel, Remit Trade, please support this channel by leaving a like for this video, subscribe to the channel, and don't forget to turn on the bell notification for more videos like this. Also check the channel for other crypto videos, educational content, and technical analysis. 4 signs to know when a trend is over in the crypto market. I'll be using BTC USDT for this example. The first sign to know the end of a market is major levels on the higher time frame. So you must take advantage of when the market come into a major level on the higher time frame, and then you mark out that very level, both support and resistance, and then you trade in line with that level on the lower time frame. Let's say, for example, BTC USDT 1-day chart is my higher time frame, and I do take trade on the 4-hour chart. Okay, so I have to mark out my major level. Now, when you are choosing your major level, you choose a level that is close to price action. Okay, so if you look at the current price action right now is this very area. So Bitcoin is now trading at 44.7k, and this is the current price. Okay, and this is the current market level right now, and the closest significant resistance is this very area, and also the closest significant support is this very level. Now, why these two levels? The reason is because when the market move all the way to the upside from this very area of support, market move into this very point, this is where we see a significant retracement. All the while market has been moving all the way from this very point. So this very area for me stands to be a very significant resistance. So I have to mark it out on my 1-day chart. So when markets come into this very level in the future, just like we are seeing the market approaching it right now, it is a very critical level for me to watch. So if I enter my trade around this very area, when markets approach this level, I am looking to take profit because I am expecting that the market retrace at this very point of resistance. This is very, very important. And if you look at the level of support, why this level of support is very important and it is a key support is because when the market was moving to the upside all the way from this very area to this very point of resistance, market come back down. This is where the retracement pause for this very retracement mode, and the market begin to move to the upside. Therefore, this very level of support is an important level of support for me. So I mark it out on my chart. Now, if I am shorting the market to the downside on futures, I have to take advantage of the market coming into this area and pay attention to this very level closely, because anything that makes the market to begin to move back to the downside, this very level is very important, and I will be looking to exit the position within this very level of important support. This is very important. So if you are trading, you must have to mark your key levels on the higher time frame. This will help you know when a market is about to reverse on the lower time frame. So you take, for example, the 1-day chart in this case as a higher time frame, and you go back to your 4-hour chart or one to take trade and monitor the way the market approach this level of resistance and support that you already mark on the higher time frame, in this case 1-day chart. So this is very important. So one of the way you identify the end of a trend is by taking key levels into consideration on your higher time frame. And then the second thing here is RSI, relative strength index, overbought and oversold, and divergences that you find on your chart. This is very, very important because it gives us a prior information about what the market is going to do in the future. Yet it has not happened, but it gives us that kind of forerunner information for us to know the market is about turning back to the downside or coming to the upside. So for RSI overbought for a downtrend, if market is about to reverse back to the downtrend, you must take advantage of the overbought divergence. If market is about to reverse to the upside, you must take advantage of oversold divergence. So what does that mean? If you come to the BTC USDT 1-day chart and you put on your indicator, that is the RSI relative strength index, go to the indicator section and type RSI and then click on the RSI right here. It will appear on your chart. And then if you look at this very point, there is important divergence on this very point. So if you mark from here, from this very area on the price chart to this very point, you see the market is moving upward, okay, on the chart. And if you mark exact same point on the indicator, from this very point, market enter into overbought condition and then come back to the downside into this very area, you discover that the market is sloping downward. So this is a clear divergence. So in this case, this is a bearish divergence because we are expecting that the market come back to the downside, and the exact same thing is what happened right here. So this give you a proud information that the market is going to come back down. That means there will be a change in market trend. There will be a change in market direction. So what you have to do once you see this kind of formation is to just confirm your formation or the divergence that you see on the chart with a trend line. And once you see a trend line breakout, it is completely confirmed. It means that the market is going to move back to the downside. This is a very clear way to identify trend reversal early in the market in crypto. So this is very, very important. Market divergences is one of the way you must have to use to identify the end of a trend in the market. And if you look at this very area as well, at the support, at this very point, we see a very clear divergence on this very chart also. So if I connect from this very point of support to this very area, you see the market come back down a little bit to form a new close at this very point. If you connect the same point on the indicator from this very area on this very point to this very area right here, discover that the market is moving upward a little bit. So this is very, very clear right here. So market from this very point begin to move to the upside. So once you see divergence like this at support level, this is a complete bullish divergence. It means that the market is going to move to the upside, and that is exact same thing that we see right here. Market begin to move upward. So all you need to do after identifying this divergence is to confirm the divergence to be true. And one of the way you can confirm this divergence is by putting on your trend line. So once we see a trend line breakout of this very level of resistance, we see resistance at this very point, we have a resistance at this very area. Once we see that breakout, this divergence is confirmed, which signal a trend reversal. So what happened? This is where the breakout happened, and then from here markets begin to move to the upside all the way up. Okay, so this is very, very important. This is the second way you will have to identify a change in market direction in the crypto market. So this very number 2 is very, very important, and it works 80% to 90% of the time in the market. And the third thing you have to do to identify trend reversal is candlestick patterns and chart pattern at key levels. Let me show you that right now. So if you go back here to the 1-day chart, if you look at this very candle on the chart right here, let me remove this very one. So if you look at this very candle, market come back into a critical support, and then from here market move up. This very candle is a closing price reversal candle. So we call this very candle a bullish closing price reversal pattern. Why? The reason is because if you look at this very bearish candle right here, the market moved down a little bit and have a little close that is lower than this. But when the market moved with this bullish candle, it moved with a price higher than this. Not only that, it also closed above this very candle. So this very pattern is termed a closing price reversal candlestick pattern, and in this case it is a bullish closing price reversal candlestick pattern. So what happened after the formation? Market begin to move to the upside. Now this is very important. I am not saying that you should use one candlestick pattern to figure out if a market is going to move up or down. I am only looking for reversal, okay, point where the market have capacity of reversing, and you have to follow these 4 signs. So from this very area, market move to the upside. That is why we're seeing the market move up right at this very point. This is very, very significant. Candlestick pattern is one of the things you can use to know the end of a market trend on the higher time frame before you can go back to your lower time frame to take your trade. And another example that is also very, very key right here is this very area on the chart. So if you look at the price chart right at this very point, you see the market move from this point upward. So from here, market move upward, come back down and move to the upside. If you notice, this very candle is equal. If you remove the wick right here and then ignore this other wick to the downside, you discover that this is a very powerful candlestick pattern called tweezer. So this is the tweezer bottom candlestick pattern formation. After then, what happened? Market move up and then come back down before we see this very breakout before market begin to move to the upside. This is very important. The tweezer bottom is one of the candlestick pattern that signify market rejection from a key level. So this candlestick pattern is very important. Pay attention to it and you will know when the market is about changing direction. So in this very reversal trading strategy, you must have to pay attention to these 4 signs before you can confirm it. So these 4 signs must not obey exactly. If 2 is clear, then you are good to go with it, okay? And the next thing here is chart pattern at key levels. If you look at this very area on the chart right here, we see a very important chart pattern at this very point before this market begin to move to the upside. So if I draw this from this very area to the downside at this very point, and then from this very point to this very area, you discover this is a triangular pattern, okay? So this is a symmetrical triangular pattern. Market broke out, and then after this breakout, market begin to move to the upside. This is very, very important. So chart pattern is one of the things you can use to confirm trend reversal, and this is very, very powerful. And if you look at this very level of support, we have a very powerful chart pattern right here. So if you draw this from this point to the downside, so from here to this very area, you discover that this is a wedge. So a wedge in an uptrend is a continuation pattern. So this means that this market is going to still continue upward after this little retracement to the downside. You see, the market was moving to the upside all this while from here upward, and then we see a wedge formation, and then after this wedge broke out at this very point, market begin to move to the upside. A wedge chart pattern formation is one of the way you can identify a change in market trend, just like we are seeing on the chart right here. Number 4 sign to check for market reversal is reduced momentum on the lower time frame. Let's say, for example, for BTC USDT, if I am to take a trade on this very chart, I have to do my analysis on the 1 day, and then I will go back to my 4-hour chart. And at this very point of resistance and support, I will be looking for reduced momentum. So let's find that out on our chart. So I'll go back to my 4-hour chart and look at this very area. If I begin to see reduced momentum within this level of resistance, then that means market is going to go to the downside, because market has been moving upward all this while. And then if I see reduced momentum within this area of support, it's also a sign that the market is going to move to the upside after the market has been moving to the downside. So if I go back to the 4-hour chart right at this point, look at how the market was moving downward. From this very point, market moves significantly downward, retrace, move down, retrace, move down, and then you see market move and fail to move to the downside at this very area. So from this very area, it was a clear sign. Since market failed to move to the downside, it means that the bears are tired of moving the market back to the downside, and the bulls are going to take control of the market to the upside. Not only that, we see an increased momentum in the bulls at this very point. Since the market has been moving to the downside from this very area downward, this is the only place we see a significant increase in bullish momentum. Then what happened? Market began to move to the upside. This is very, very important. It's one of the way you can use to identify a change in market trend. And if you look at this very point as well, market was moving upward, retrace, market move upward again, retrace, market failed to create a new close. So if you look at what happened at this very point, market move up and have this very rejection back to the downside, and from this very point, this very momentum have been lost by the bulls. Look at what happened here. There was a strong momentum to the upside, strong momentum to the upside, and they failed to complete that very momentum at this very area. Then what happened with the bulls? The bulls have completely lost the battle. We see the bears come in and hit the market back to the downside. This was a clear sign that the market is going to move back to the downside. So this is what we see right here on this very chart. So after this very move by the bears, what happened in the market? Market retrace, come back down, retrace again, and move back to the downside. So reduced momentum is one of the way you can use to identify market change of trend that we see at this very area of important resistance, just like we see also at this very area of important support. This is very, very important. And for a recap, these are the 4 signs you have to pay attention to identify market reversal. Major levels on higher time frame, RSI overbought, oversold, and divergence, candlestick pattern or chart pattern at key levels, and lastly, reduce momentum. Apply this with your strategy and you will see a change in market trend even when it has not actually happened. If you are new to this channel and you find this video useful, please support this channel by leaving a like for this video, subscribe to the channel, and turn on the bell notification for more updates like this. Also check the channel for other crypto videos and educational content. If you have not registered on Binance, OKX, Bybit, check the description of this video. You see a link and register right now. Bybit have $1,000 bonus when you use my link down below this very video. If you want to enroll for the Remit course, check the description of this video and you see a contact and reach out to me and learn how to trade cryptocurrency like a pro. Thanks for watching and I will see you in the next video.